All right, good morning and welcome. It's Tuesday. It's time for Tuesday's morning market tour. And pretty much until a few hours ago, have done nothing overnight except slide. Hang on one. Okay. So, which is interesting because yesterday and ongoing has basically been scraping out some accumulative behavior, just never bouncing. The accumulation every day of accumulative behavior ongoing with one and then two interruptions, never consecutively. But by the same token, every intraday recovery having held a test, isolated sellers under whatever relevant support, everyone has failed to do one thing, and that is close back above a relevant resistance, leaving it to the next open to gap up, which it hasn't been doing, spoiler alert, in order to, by proxy, trap those isolated sellers to the point of squeezing and reversing and all sorts of upside stuff that is not developing. And as a result, not so much that this has become a stalled pattern, but that in order to get out of the hole, rather than stop digging, sellers needed, eventually, apparently, have needed and have for some time, again, if they weren't going to gap up, to stretch the rubber band to the downside. And basically, that is the bullish interpretation of what's developing today. And whether that, and by the way, let's just look at the bigger picture real quickly, since I have it up. Uptrending channel. Remember, trend lines define trends. Trend line breaks do not signal reversals of the trend. Trend line basically organizes a trend, and trends don't have to be organized. A trend is, at its core, ongoing series of higher highs and higher lows. That's it. Higher highs, higher lows. They can honor a trend line, or they can break a trend line and recapture the trend line. It is in those trend line breaks that we get some other information. So, for instance, this uptrend line that has broken has room down to its last trend line touch, which basically in this case is kind of overlapping, but down to 4,100. There's some math, Fibonacci involved. We're not going to do it at this moment, but basically 4122 and then 4108 are the next major lines in the sand, and they are put into play in two different ways. 4122 put into play simply by failing to hold a test of 4142. And 4142, as far as whether that is being tested, holding a test or not, depends on whether it's probe, whether the probe, clearly there's a lot of probes, whether the probe is recovered through a relevant timing window. So for instance, here's a whole lot of tests of 4142, tests of 4142. Price is one vector, timing is the other, and in each of these tests, they are recovered through a relevant timing window. So the test doesn't even develop until a timing window has opened. One timing window is, for instance, the overnight. So back here is a test, big test, couple of tests. we really should segment that. It doesn't really matter at this point, but test 41.42 during the overnight only. Test of 41.42 during an opening window. By the time the opening window closes, the test is absorbed. Same thing for this subsequent test, and you can see those buyers being rewarded. This doesn't have any bearing on current, just trying to point out how a test of 41.42, again, another overnight test of 41.42. Here's an intraday test again, but isolated to the bias window, the morning bias window. You can see the morning bias window identified down here on the timing ribbon under the chart. It closes or starts closing at 11:30. That's when 41.42 is finally probed. And then it's recovered by the time the noon hour lapses into the next timing window. So another isolation. So big question. Are we about to isolate another probe under 41.42? That's the bullish scenario. The bullish scenario is that by the time we get through the open, this will once again have been isolated to the overnight. Another big disagreement between sellers and valuation. We can't just hold 41.42. We can't just be overlapping 41.42. We have to actually be trending back up above 41.42 in order to know that the next timing window we want to be positioned long, because something to some degree to the upside is developing. And meanwhile, 41.42 is resistance. It's certainly being resistant here since last night's relentless overnight trending, which, by the way, is intact. Ongoing series of lower lows and lower highs. Maybe a trend line has broken, but or the trend has gotten ahead of itself and snapped back up aggressively, seemingly bullishly, but not durably, not anything that has reversed the trend. So the relentless overnight trending remains intact, which means that if the first 15 minutes of the open trend down, we'll anticipate resuming the overnight trend. Now, the relentless overnight trending has to remain intact into the open, but if this just flatlines from here, then the series of lower lows and lower highs remains intact. And the first 15 minutes trending down, or depending on where the open is being met, how much selling pressure develops post-open immediately through the first 15 minutes, we could even exit the first 15 minutes under the overnight lows. That would be also confirming that relentless overnight trending had intended to extend down this morning. If we greet the open with the setup intact for relentless overnight trending, I'll pop this card back up. I'll leave it here for a few minutes. But basically, this is the relentless overnight trending play card. Meanwhile, this capitulative behavior certainly stands out, and I mean, it should. It doesn't matter where it's developing versus other price action, but not to the intraday. But we should note it certainly helps to be on a plane of prior lows. It certainly helps that it is capitulative behavior, but not until it recovers this prior extreme. Right now, there's a discernible down leg, bounce, discernible down leg, bounce. Once again, bounce has failed to recover, whether it's an intraday rally or this little bounce, but failed to recover back above a relevant high. So we need to at least start recovering this prior high, 41.40. I'm calling it 42. The whole 41.42 area is significant. It's not necessarily support so much as it's a trigger or a line in the sand or a milestone. And as long as 41.42 is or 41.42 is holding as support, we can't yet assume that we're extending down, but if we are, we're extending down to 41.22, if not 41.08. And as I described Saturday during the bigger picture, that's a big domino effect if that leg isn't isolated in a fashion that I just described. The other legs being, or the other probes under 41.42 being isolated. If this extends down to 41.22, let alone 41.08, and it's not isolated in a timing window, one of the timing windows we see labeled underneath the screen, underneath the chart, then there's a big domino effect that develops multi-day or longer, so pretty deep. So pretty important that 41.42 be recovered, and 41.42 isn't even the level to recover. 41.42 is the level to break, but its counterpart is 41.45. I've even got some room for noise there at 41.48. So we actually have, to the downside, we've got some predictive levels, and here I'm going to put this on the 1 minute chart now. We have some predictive levels on the downside at 41, 41, 41, 42. How's that? The downside when we're under it? Well, we're under the downside. We are stretching the rubber band right now. This is a stretched rubber band. If you picture a stretched rubber band that you are holding tightly or stretching tightly, either you're going to wear out or the rubber band is. This is a rubber band about to wear out. If we greet the open down here, the likelihood is, first of all, that we don't greet the open down here, but down here, because the rubber band is already worn out and breaking and extending to the next level with our pressure. Otherwise, the rubber band holds and we're snapping back up, and that range is 45 to 48. So a lot of resistance, a lot more resistance or range of resistance above than there is support below. But if the open, that is the first 15 minutes at 9:45, were exited back above the entirety of 41.45, 41.48, or on its way to probing above 41.45, 48, we could start to give buyers a big benefit of the doubt. Not necessarily that we're finally resolving this ongoing accumulative behavior, cumulative range, even if only to return to its upper end, which even the most bearish scenario allows for. But recovering 41.45, 48, at least to trend up for the morning, to whatever degree that is. Presumably, it does at least get us part of the way back to the upper end of the range. I mean, we could see 41.80. Pretty big swing from the overnight low, and it's intended to be, because that's a lot of big capitulative stretch. So it's a big reward if we come through the open above 41.45, 41.48. So these are the two lines in the sand that I would track going into the open. Meet back here at 9:15, and we'll see where we're actually greeting the open. I do want to point out 41.33 is a relevant level. Under 41.33 at this stage, probably we're not just returning to a test of the capitulative low, but on our way to breaking it. There's nothing about this V bottom, this spike, that offers much support. If anything, it's predictive. It's chipping away at support. It's puncturing. It's kind of hard to imagine a balloon being punctured, the bubble popping when that bubble is below us, but it's the inverse of a bubble popping above us and collapsing through it, basically. So 41.33, probably a big line in the sand to that effect. We'd probably be already greeting the open, attacking it, if not already probing it, if the market intends to resolve down this morning. But these are the levels to maintain that risk to the downside at the open, which we're on the cusp of recovering, 41.42. But then to actually get out of that jeopardy and reverse momentum up, 41.45 to 41.48 needs to be recovered. So meet back here at 9:15 and we'll see which of those is being threatened or probed. Meanwhile, the euro bounces yesterday from a ongoing narrowing extended range, which is a setup that often breaks falsely in one direction before reversing more substantially in the opposite direction, or at least tags up. And this doesn't qualify as tagging up. Yesterday, coming out of the weekend, before extending higher. So this can be a bearish double top if this interim consolidation produces a fresh high, which the overnight is working against, by the way. But extending relentlessly to a fresh high, even including this little dip, not even that little, but staying away from tagging up. Don't tag up. Don't, having broken above this extended narrowing range, don't dip back all the way to the range, let alone into it, before resuming the rally. Instead, extend back down through it, and we could look at this as an ongoing corrective leg, just a lot longer and more drawn out. But if this leg, instead of tagging up first, extends higher, then a bigger double top will form. Or in the dollar, inversely, a bigger double bottom. Silver tried bouncing yesterday. It didn't do anything that reversed its consolidation range or tried to resume what we had actually initially greeted the weekend with some firming that disappeared. And so overnight we're back down to the lows. It's pretty aggressive selling pressure from attacking the upper end of the range to now be greeting today's session at the lower end of the range. I mean, there's really this is not a precise horizontal trigger line for a reason, because it's not really a trigger line. We're testing to varying degrees this prior consolidation down to about 24.75. So it is 24.75's break that is more predictive of reversing down. And it kind of looks like head and shoulders. It's not. There's no requirement to roll over and fall off the cliff here. So instead, this is just another test of or attack on 24.75. And in any case, waiting for a break above 25.50 to resume the rally. So the point is, there's no point here. Silver doesn't have a signal triggering. Gold doesn't have a signal triggering. It is still fluctuating around its 2001 focal point. That has held prior tests. You can see there's an isolation. Gap down, immediately recovered. Friday's test contained just every single probe under 2001 has its fault that prevents it from being a trigger. Sellers keep coming back for more. and breaking under 2001 through a close would be credible. Again, now that another test under 2001 was absorbed, all that support is gone. We can give it a benefit of the doubt. Gold is rolling over right now. A short here needs a stop above 2001. Having said that, though, there's not a lot of downside required if we knew with 100% certainty that these lows were being probed, that were going on to retest prior lows in gold. There is potential to extend that into 1990. So pretty good risk to reward. Just looking at the numbers of short 1990 stop, not reversed along, just stop above 2001. With target at 1900, huge risk to reward. It's just it looks like momentum, but there's not. That's the only risk, is sitting there doing nothing. Long bond up sharply, repeatedly failing to exploit this probe under, at first producing on sell signal after sell signal, but back down to prior lows that just never extended down, never got any confirmation, even intraday probes under relevant support being about 129.20, failing to extend, not trending down even when we got a gap down on Wednesday. The balance of the session just ranges sideways and then totally rejects sellers with the gap up back above the trigger. So the only thing that any upside's been waiting on formally is break above 131.12. 131.12 having eked higher to hover basically effortlessly in proximity of 131.12, breaking higher overnight. So that puts the burden of proof on buyers. I mean, they've certainly been doing their part already to prevent extending down. But burden of proof on buyers, now that 131.12 is being tested, to maintain that recovery, not prove that this was just refueling sellers for a break back under 129.24 at the earliest, 129.20. I really don't like the setup in the long bond. It's just not great timing. And crude oil, which, let's do long story short because of the timing, had tried to extend this stalled rally instead of fulfilling a pullback, basically all but required pullback. So those buyers, those trapped shorts, all of which missed just when they were needed most to extend a breakout, never extended, never confirmed. In fact, finally got back down here. So now there's an opportunity. There's certainly a response to this relevant level. This proxy gap between the actual gap. If this proxy gap can't hold and launch a recovery, then we're heading down to the actual gap, and actually probably heading down to its lower prior highs around 74.35. And the only reason why now, or the reason why now I'm turning attention to that, is because we're not extending higher overnight. We've gotten back up to relevant resistance, basically at attacking 79 handle, or probing a 79 handle, but not actually, even despite getting to within proximity of this buy signal, trying to probe it overnight. So if this isn't recovering, if we're not recovering this morning, which is definitely possible, Tuesdays are pretty good days for that. For the volatility, for the head fake. If no head fake here, then we're heading down to a 74 handle on crude oil. And then finally, Bitcoin. Bitcoin, just to summarize, nothing going on. We do have the potential for a low. We did need, as we were talking about 24 hours ago, needed a fresh low. The bounce that was underway was not credible yesterday into yesterday morning. And nothing would be credible to the upside without at least probing a fresh low. We got a fresh low, temporary. That doesn't matter. What mattered was how quickly that temporary probe of a fresh low could be rejected. Not retraced, rejected, reversed. And it wasn't reversed. We've just consolidated it. So that's making an even lower low increasingly likely. So Bitcoin now putting into play this sweet spot of support. 26,750 to 27. That's going to be the next opportunity. Unless it can close above 27.8, but that really needed to trigger pretty quickly, that setup, and it hasn't. I'll still give it a benefit of the doubt if it triggers this morning. If we're meeting back here for the afternoon wrap up and 27.8 is being probed, we can give that a benefit of the doubt with caveat, literally. But meanwhile, it's been a little too long not to have exploited this trap, so that the trap instead can be interpreted as chipping away at support on our way to probe 27. And Ethereum, which was basically in lockstep, in tandem with Bitcoin, is now extending deeper, and that's fine. No problem with that. Ethereum can lead the way down. Bitcoin, if we're going to ultimately resolve this consolidation / pullback, Bitcoin cannot be downside leadership. And here we can see it's not, compared to Ethereum, which is probing back to its lows. All right, a little extended there just to get the context of this amazing, yet again, relentless testing of 4142 that is trying to recover. There's nothing about this overnight test that requires extending down. It comes down to whether, and by the way, trapping or isolating more selling under 4142, if ever this range triggers something to the upside, all of those trapped sellers become buying pressure. So they do tell us that that the upside should be that much more aggressive, that much more obvious. But let's leave it at that. Meet back here at 9:15. Good luck today. All right, good morning and welcome. It's Tuesday. It's time for Tuesday's morning market tour. And pretty much until a few hours ago, have done nothing overnight except slide. Hang on one. Okay. So, which is interesting because yesterday and ongoing has basically been scraping out some accumulative behavior, just never bouncing. The accumulation, every day of accumulative behavior, ongoing with one and then two interruptions, never consecutively. But by the same token, every intraday recovery, having held a test, isolated sellers under whatever relevant support, Everyone has failed. I'm turning attention to that is because we're not extending higher overnight. The upside without at least probing a fresh low credible yesterday into yesterday. And then finally Bitcoin. Bitcoin, just to summarize, nothing going on. We do have the potential for a low. We did need, as we were talking about 24 hours ago, needed a fresh low. The bounce that was underway was not credible yesterday into yesterday morning. And nothing would be credible to the upside without at least probing a fresh low. We got a fresh low, temporary. That doesn't matter. What mattered was how quickly that temporary probe of a fresh low could be rejected. Not retraced, rejected, reversed, and it wasn't reversed. We've just consolidated it. So that's making an even lower low increasingly likely. So Bitcoin now putting into play this sweet spot of support. 26,750 to 27. That's going to be the next opportunity. Unless it can close above 27.8, but that really needed to trigger pretty quickly, that setup, and it hasn't. I'll still give it a benefit of the doubt if it triggers this morning. If we're meeting back here for the afternoon, so I wasn't even checking comments, and I see kicked out twice in a row. Is that ongoing, or was that just briefly, or how is that resolved? All good since then, or just now? Okay, great. Yeah, definitely. Please let me know if that repeats. All right. Good morning again. So, as we come into the open, there is no rejection of 4142's resistance. It is holding. I had suspected when I put out the blog update after the planner, after the strategy planning session, I had suspected and mentioned, and now really want to underscore. This is the longest stretch of all the testing of 4142, all the isolated tests. You know, if we just get rid of the overnight, we can see even back here. Intraday, look at all these probes, probe, etc. Now, here is actually Sunday night's break under 4142 that actually utilized 38 as resistance. 4142, though, as a legitimate isolated resistance, a singular level. 4142, this is the longest stretch I've seen it tested, or that we've seen it tested in this run. And I'm wondering if it hasn't flipped. So it's 4142 now flipping to become resistance, and these are just obligatory probes above it ready to snap back down. So we don't have an answer because we're not grading the open already under 4133 or above 45. And those are my lines in the sand. I've tightened that up a little. A post-open bounce would still be vulnerable to reversing down. I'll give buyers the benefit of the doubt and then stop and reverse to short. Probably that's going to be the solution to getting out of a week long there. But as far as just entering short, I'm pretty willing to get short under. I think 4135 keeps coming and going as far as its attractiveness, but under 4137, 3750. Confirmation under 35, under 33. I think we could be at 25 or on our way to 22 pretty quickly if that's the case. But I will give buyers the benefit of the doubt. See where we open, but probably looks like around 43. Get out above 48, and that's just another test of 42 that was absorbed. All right, any questions, please ask. I'll be right back. All right, so a question, what is the bias window mentioned in the footer on the charts? So the bias window is really the central focus of the viditrade methodology. There's a bias signal system. Let me get a post from the blog out here. So every day I make 2 posts. I mean, there's a bunch of posts that we make, but here's 2 of them. They're the bias strategy. This one is published at the close. So it's based on patterns that have developed through the close. And from that, I know that this morning, there's a 60 to 90 minute window. That's what you're seeing under here, 10:15 to 11:30, 11:30 to noon. That morning bias window. At 10:15, if price is above 66, we're going to target 41.77. If it's under 41.51, we're going to target 37. That's it. That's the extent of that. Now, there's all sorts of rules that come into play. By the way, if we're between the signals, there's no bias. And this is what you get in the blog. We don't really do this in the streaming, in the simulcast that I'm doing on YouTube. But this is a separate thing that I'll refer to throughout the day, and it'll give us predictability for that 60 to 90 minute window. And then we do it again in the afternoon for patterns that have developed through noon. They tell us what the afternoon bias window is likely to do, if it puts a target into play or if it puts a floor or a ceiling into play. It's these red lines. Meanwhile, you can look on the 3-minute chart here and see these red and green lines. These are the bias down parameters. These are the bias up parameters. So clearly we're going to be under the bias down signal at 10:15. Putting into play a test of the bias down target. Well, that's not very useful, but at 10:15 we might be under the bias down target and put into play a test of the bias of the next lower target, which I verbally tell you is 41.22. And then one more look that I can point out. This is without the overnight, taking the overnight out. These are all the past morning. I don't save the afternoon bias parameters on screen, but I save the mornings. And you can see their influence. They're pretty influential. Or can be. So I'll be talking about it as we get into the open, get through the open. I'll start talking about it. You'll hear me mention what's going on with the bias parameters. So the open, yesterday's cash session close was 60.50, 40.60.50. So let's go ahead and anchor the Fibonacci tool at 40.60.50. And the opening print was 38.50. All right, well, this is really interesting on a couple of counts. Let me move this forward a little bit. So what I just did was identify the proxy for the gap back to yesterday's close. So, gaps are always filled, they say. Walter Deemer, technical analyst, says gaps are always filled. Gaps are, I guess, eventually filled. Near term, what's even more relevant is the Fibonacci scheme that's projected from yesterday's close, the gap back to yesterday's close, to today's open that created the gap. And that's what I just calculated. And I use yesterday's cash session close. That is, what's the futures price when cash stops trading, as the anchor. And it's interesting when I see that the projection, that the 38.2 projection from yesterday's 41.60.50 cash session close to today's 38.50 open, when I see that that's been met overnight, and this isn't a shock, we've been able to do this for the last couple hours. So long as we knew we were going to open in this range, we would have been able to anticipate. That's already been tested. That's the bullish, probably the most bullish feature to the market right now, is that there was, retroactively we know, there was that much selling pressure that versus the open. The open is not so far removed from having met that very relevant level. There's a retroactive psychology, basically, a mass psychology, a herd mentality, that is comparing yesterday's close and today's open to the overnight and making all sorts of valuation judgments as psychology, or psychologically, not with a spreadsheet. And probably not using this technique either. But this is a very relevant support to have met. There's no bullish reason to revisit it. Plus, having responded to it, I know that its counterparts are going to be influential as well. I can now hone in where I've had I think a fairly wide range of resistance here at 45 to 48. I like 41, 42 better. That can be more predictive. In fact, it's pretty interesting. We're testing 41, 42. You can see, despite having gapped to 38.50, we're quickly coming up and very clearly being influenced at 42, 41, 42. I can hone in on this range. I like how 47 happens to be the 61.8% retracement within that range, 45 to 48. I've got in other words, I've got a singular numerical representation. That I'm willing to give buyers the benefit of the doubt. Above 42, that their room fluctuating around or back up to 47. Really want to limit the number of lines on my screen. I still want to see some buffer here, so I do still want to see 48 probed just for confirmation that 47 is being exceeded. But if I get any kind of a buy signal in here, my target is 47, 48. Right now I'm looking though at 42, 41, 42 still being tested. If I have any degree of confidence which way this 41-42 test is going to resolve, as soon as I do, I'll position for it. But that's pretty much the equilibrium point. That's 41 or 42 specifically has been a pretty critical spot to be tested intraday, overnight, in any case, that whatever timing window it was being tested, that timing window recovered back above 42 to isolate those sellers, to trap those sellers, so that those sellers trying to claw back into the market, whether to cover or just fear of missing out because they were flat, helped to fuel an up leg. Not that the up leg has reversed. Up legs have not closed above any prior resistance point to indicate that this week plus long trading range has resolved. You are here. And now we've already seen into the future to know 41.42 is a relevant level. So looking back now, it's not surprising to see 41.42 maybe being pierced, but clearly there's something significant going on at 41.42. So I'm well, let's see. We're halfway through the first 15 minutes. I'm going to go ahead and identify the buy signal. Really just confirm it is 41.44. So back above 41.44 would be attracted to 41.47. I don't want a trade that targets 41.47. But if 41.47 being targeted can open the door to basically implied odds that 41.48, 41.50 ongoing, yesterday's 41.61 high, 41.80, 41.92, all sorts of stuff to the upside starts opening up. If 41.42 is left behind, if the first 15 minutes, for instance, elapses and we're back above 42, and really back above the room for noise above 42, which is 45, and really back above 45's counterpart, which is 48. Don't have to be back above all of that stuff to start betting on being back above all that stuff. Just need to start seeing the behavior above whatever preliminary level that suggests we're heading to that higher level. So back above 41.44, I'm going to give a benefit of the doubt that we are leaving 42 behind. And I'll give that a benefit of the doubt that it is going to extend through 47, 48, and do all sorts of upside things that further entrench buyers having absorbed sellers. That's the upside. Anything short of that upside is bearish because the clock keeps ticking. And as the clock keeps ticking, without recovering, without extending above 42, that means that all this trading under 42 won't be isolated by the time we get to 9:45, 10:15. So the first 15 minutes is the most volatile window of the day. It's the least predictable because it is, and least reliable because it's the most concentrated window where all these different disparate objectives are being played out. Overnight orders coming in for retail mutual funds to professionals positioning. Maybe adjusting the market before then to help absorb or even entice those orders. Don't do that. So now we're stretching the rubber band. Now 41.44 is a line in the sand. I wish everything were precise in the markets. We have precise quoting. This is the price at this time. But it doesn't go beyond that because I can say precisely 41.44 is the relevant level, but actually triggering it, I want to see that exceeded by at least 4 ticks to know we're even testing it. Until as a signal. Until then, we're testing it as resistance. In fact, look at that, a single tick right there. That's noise. So now, having stretched the rubber band, to 44, I'm willing to look at 41. Actually, I want to give it a little bit of room for noise. Under 40.75. So under 40.75, having touched 44, not yet probing it by at least 4 ticks, not yet starting the countdown on testing it as a buy signal. Minimum 4 ticks, we get to start a 4-minute countdown. Whatever buyers are able to produce during those first 4 minutes, they don't even know all 4 minutes have to be spent above 44, but once that countdown starts, by piercing 44, the relevant level, the inflection point, piercing it by at least 4 ticks. Once that countdown starts, it establishes then at 4 minutes a high. And maybe the high printed before those 4 minutes elapsed, maybe the last tick of those 4 minutes is still probing a high. Whatever. Not all 4 minutes have to be spent probing 44. But when those 4 minutes have elapsed, we'll know how much higher buyers have to perform to indicate that reinforcements have arrived. Anything beyond, we've only got 1 tick, it's irrelevant. Once we get 4 ticks, minimum 4 ticks of spending 4 minutes above 44, anything higher would be reinforcements. And we'd expect reinforcements to behave like reinforcements, being aggressive, extending to the next higher attraction, etc. Where anybody acts is up to them. I mean, if you know the buy signal is above 44 and you have a buy stop at 44.25, well, you're long right there. What are you doing now? Maybe if you're not comfortable trading the open, then there's a really good solution. Don't trade the open. It's sitting on hold is a strategy as well. Waiting for 44's test to even establish minimum 4 ticks to start a countdown. You know, by the end of those first 4 minutes, we could be 10 points higher. I don't want to wait to buy 10 points higher, but I'm also not going to buy 10 points higher. I'm not going to wait. If I'm waiting for 4 minutes or even for several minutes or a couple of minutes and we're already several points higher, I'm probably not going to buy it. So here's a sell signal under 40.75. So a sell stop at 40.50 will trigger. It will go short, printing 40.50. So there, that's already short. And one more tick here. There you go. So we're starting the countdown now. Now this is a little different. It's the inverse of what just developed at 44. But it's a little different because at 44, we never got at least 4 ticks to start the countdown. Here we do have at least 4 ticks. By the time we get to 4 minutes, we may be so far removed from the sell signal as to make it irrelevant. So if you're immediately actionable, you don't have to worry about your stop. You can move your stop. You've got something in here. We may not, at the end of 4 minutes, be anywhere close to here. At the end of 4 minutes, we may have retraced it all. At the end of 4 minutes, we may be done. This is the usual attention span of counter trend sponsorship happens to be during the first hour, about 4 minutes. So until we see reinforcements, we don't know if this is actually reversing down. I suspect, of course, this is 9:45. The first 15 minutes have elapsed. At 9:45, we were still overlapping 42. We weren't actually rejecting it back above its counterpart, 45. So I suspect that from everything that I've been describing that the market is intending to run with this. There's 33. That was a likely objective. 33, 35, 33, 33.25. But 33 is, for all intents and purposes, being tested. You know, there may be some latency here with YouTube. The Vidi room, the live room that I'm broadcasting on an Adobe Connect platform is live, real time. So unfortunately, I don't have control over YouTube's latency. So we have 4 minutes now spent probing under the sell signal. We have a 4-minute low. We know that 41.3275 is the low of testing the sell signal. Under that, it will give a benefit of the doubt is reinforcements. And what do we know about reinforcements on a break under 42? That their target is 41.22. Well, that's interesting. So 41.22. Let's also identify a stop or a bounce limit at least. Bounce limit is 37.50. We're not even testing a bounce limit right now. So 37.50, you can treat it like a stop. You can give it one tick higher buy stop, 4 ticks higher to know it's actually being tested. Well, is the audio and the video matched? Are the audio and video feeds matched with each other? That's a problem. If not, this is for a. I've never seen a 3-minute delay, so that's pretty long latency. But I do want in any case, the audio and video tracks to be simultaneous. But back to this bounce. So the bounce limit is 37.50. Like the sell signal, it can be probed for 4 minutes and still resolve down. If it were being probed during those 4 minutes, I'd be trying to find a place to sell, because usually that bounce limits test is going to resolve down. The whole point to the bounce limit is to identify where it becomes optimal to sell it. So we've got a 4-minute low. Not surprising that when we break an inflection point, within 4 minutes, there's a noticeable low. The low of 4 minutes is influential. It could have been the first minute. It could have been the third or the fourth. but that after that 4-minute window, there's going to be some obvious influence there. In this case, that obvious influence is taking the form of, potentially, of a continuation pattern. It's not very well formed, but I like where it's forming at the 38.2% retracement. Right around 36. Somewhat of a flag or a rising wedge. I'm willing to give it a wedge. Lower high, don't need to see any higher high. But continuation pattern anyway. And if I cross-reference this against my 3-minute chart, and you can see the red line for easily labeling purposes, it's the bias down target. You can see that is resistance. It's behaving as resistance. It was behaving as support earlier. And it may very well go back to behaving as support if it's flipped. If as of 10:15 it's been recovered, often it'll be difficult, not impossible, but to break back under it without some other regrouping at a higher level at least. Well, we can lose this 33, 35 area. So, continuation pattern, is this forming a flag? If it is, then this should be the go-ahead. We should see this bar and the next several extend down. Still no lower low under the first 4-minute test of the inflection point, let alone under the first 15-minute low. There's a setup that I look at. I compare 10 o'clock. At 10 o'clock, I compare the first two 15-minute windows, the 9:30 to 9:45 window and the 9:45 to 9:46 to 10 o'clock window. And we'll do that at 10 o'clock, just preparing. That's what we're going to do then. And there may be some predictive value to that. So right now, there's no such thing as a mental stop. Even if you have a resting stop that's light years away from where you hope to be able to pull the trigger mentally, you have to have a stop working. Anything can happen. Look at this. The market's telling us that it's got plenty of flexibility here. Look at what it just did. Trading down 10 or 11 points in a couple minutes. It's self-delusional to think that we'll be able to trigger our own mentally managed stop, that we'll be able to pull the trigger on it when we see something that tells us we want it triggered, and then process it in time before this develops off of that. So you have to have a resting stop. You can always override that with a manually triggered stop. But at the very least, that stop should reflect your own risk tolerance. I'm just looking at the chart when I identify what I call a bounce limit. And you can use that as your stop. This bounce limit's at 37.50, so the stop would be 37.75 or higher. I can tell you if 37.50 is probed that I'll be counting down for the purpose of marking up the chart. I'll be counting down 4 minutes of probing it, or the first minimum 4 ticks of probing it. And then 4 minutes after that, I'll know where the 4-minute high was. Again, all 4 minutes don't need to be spent above that bounce limit. I may have a degree of confidence where that 4-minute high will be long before we get to the end of the 4 minutes because we've already started reversing down. It's not very useful, but it becomes useful when that bounce limit, let me move this over here. So I don't like to move labels, annotations after the fact. But I won't delete it. If it was there on screen when the market traded through it, I'll leave it. So here's the bounce limit at 37.50. If 37.50 is probed by at least 4 ticks, I start a 4-minute countdown. As soon as I have a degree of confidence where that 4-minute high is, I'm going to try to find a place to sell. And there may not be a place to sell, but the point is, once I know where the 4-minute high is to testing the bounce limit, anything higher violates the bounce limit. Meanwhile, waiting for those 4 minutes or holding that 4-minute high is just a corrective bounce on the way to lower lows. So I can flip a coin, or I can give a benefit of the doubt to the prevailing trend winning out. That was not planned. So if the bounce limit, I wish I had a tighter bounce limit so I could start a countdown. If the bounce limit were down here, for instance, I could already be counting down 4 minutes. I'd have something actionable that I could sell. This may very well resolve down already and not offer that opportunity to indicate to get short into it. And by the way, this is 10 o'clock. I'm describing something else. Meanwhile, there's news coming out. The first 60, 90 seconds following the news, following an expected news item, like an economic report, the first 60 to 90 seconds following news is a knee-jerk reaction. By definition, it is weak-handed sponsorship. I am simulcasting between an Adobe Connect platform that is real time and YouTube that apparently there's a latency. I don't have any control. I see earlier it was 4 minutes and now it's only 5 seconds. So that's great. So long as the audio and video are tracking with each other, that's important. So for instance, right now I'm moving the cursor at 41.42 now. And then I'm going to lower it to 41.34 now. So long as those are tracking, that's most important. And it's not a sales gimmick, but you've given me an idea. Anyway, just to point out that the whole point to me offering this free look is not so you'll want real time, but so that you want the signals all the time. I I wish YouTube would portray them in real time, but a few seconds, that's not bad. So the knee-jerk reaction to news is over in 60 to 90 seconds. 60 to 90 seconds later, what are we doing? We're right back at the bounce limit. But we have established a very real 4-minute high. So, and we're not even 4 minutes out, and I'm going to make the assumption, this is what I'm referring to when I say that we, as soon as we know where the 4-minute high was or know where it will be, and I'm pretty sure, I could be wrong, but I'm pretty sure I know where the 4-minute high will be. I think I'm looking at it. So if most of the time, if I just put all my other analysis aside, every other market behavior that I'm monitoring and every other target and pattern that's triggering, etc., and just focus on the bounce limit, and I assume one thing, and that is I'm always going to assume that the bounce limit holds its 4-minute test. Holds its 4-minute test is not, that's arbitrary. What I mean is the result of its test is going to be a fresh low. Putting everything else aside, if I just assume that the 4-minute high is going to hold and the next significant price is going to be either reversing to the origin of that test, which is a new low, or rejecting, violating the bounce limit, rejecting the prevailing trend, exceeding the 4-minute high. I'm going to choose, usually it's like, it's not flipping a coin. I'm going to choose, statistically, more often than not, the bounce limit holds. Why? The trend is your friend. Even on a very granular scale like this. Or at least, let's just assume. Let's pretend. So, I know the 4-minute high is up here at 40.50. I know anything higher violates the bounce limit. Actually, I'm going to give it a 1 or 2 point buffer for noise. Let's call it 42. 42 is the nearest relevant level within a 1 or 2 point buffer, so I'm going to say 42. My stop on a short is 42, or higher than 42, 42.25. Maybe even stop and reverse to long is 42.25. So, if I'm expecting, based on those assumptions, if I'm expecting to see a fresh low, let's call it 41.32.50. Right now, let's say I could get in at 37.50. That's a 5-point profit. And my stop is 42.50 almost. That's a 5-point risk. That's a 1-to-1 risk to reward ratio. If your trading plan says, I'm going to take 1-to-1 risk to rewards, there it is, right there. If your trading plan says, yeah, I'm just going to go with the 1-to-3 or 1-to-4 or better than that, then you have to do the math. And on the sliding scale between 42.50 and 37.50, what entry point represents a 1-to-3 risk to reward? I'm doing math. So I've got to get in closer to where I know I'm wrong. I want to be, if possible, I want to get in at the 4-minute high, of course, because that's pretty much right where anything higher, that's pretty much where I'll know I'm wrong to be short. So, and keep in mind, the risk to reward ratio doesn't work. Here, let me actually bring out a little cheat sheet. So the risk to reward doesn't work if you're not taking the risk. If you're not executing on the risk. If the risk that you're accepting is 42 and you don't have a stop at 42, then you don't really have a risk limit of 42. So let's first understand that. You're willing to take the reward, I'm sure. So how close can I get in short near 42 or 40.50, the 4-minute high? That's usually going to be something 40.50 or close to it. 40, maybe it'll be probed in the process of holding its test and reversing down. So the boat may have sailed by now, but let's say 39.50 is the short entry. We're putting a limit sell in at 39.50 with a stop at 42.25, 42.50. 3-point stop. Am I looking to make at least 3 times that? A 1 to 3 risk to reward? 3-point stop off 39.50. So looking for 9 points, 30.50. Close. Better than a 1 to 2. So maybe I can get a 1 to 4 risk to reward, but that 1 unit of risk is actually 5 points. And another element to my trading plan is I don't want to sit through a 5-point drawdown. Well, that trade selection doesn't work. That trade doesn't work. Wait for another opportunity. So what we're doing here is a combination of market behaviors. 90% of what I am saying at any given time is discussing a market behavior. The likelihood of a bounce limit test to retrace its origin. Maybe it's a 51% likelihood. I want an edge. That's my edge. It's more often than that. And it doesn't even have to be that often, so long as more often than not, the bounce limit tests, the 4-minute high to testing the bounce limit at least attacks the origin. I mean, it's a different environment right now. At 33.50, it's a different environment than it was testing the bounce limit. I don't need a fresh low. I don't need to see 41.30. I can adjust my stop. I can put my stop down, trail it behind this short. Assuming I shorted up here, somewhere up here that made sense, versus what the risk was that I was willing to accept for my 1 to 3 risk to reward ratio, or 1 to 2, whatever it was. I don't need to see that ultimate multiplier play out on the reward. If I trail my stop down, I just want to get in good, and I want to be in a behaviorally sound setup, likely to be attracted to the origin of that bounce. Didn't have to retrace it or even probe it, which we're doing now, back to 30. Because at the end of the day, I just want profitable trades, whether they hit the predefined target or exceed it. So another bounce, and I'll have another opportunity to assess a 4-minute high. I'm not going to get back to the high 90% of the time, let's say. I'll write it out, but I want trades, and so I have to be willing to get in on an attack on that high. Once I know where the 4-minute high is, I have to be willing to get in on something attacking that. If I wait around for all the times that actually return to the 4-minute high, days will go by at times that I don't get a trade-off. All right, the bounce limit is 31.50. And now it is 30.25. So we know by having failed, this is an entirely separate track from what I've been discussing. We know that having failed to hold 42 through the first 15 minutes, 4142's test was not being isolated. First time in a couple weeks. We had a pre-open indication behaviorally. I commented on how this was the longest stretch that I'd seen 4142 serving as resistance. That's not a signal. That doesn't say, therefore, 4142 is now resistance and won't be recovered. But it was a change in behavior that made that likelier to be developing. In fact, has developed. So, I know that 4142, having failed to hold, now puts into play 4122. And I didn't come back at 10 o'clock and make a comparison I need to make real quick, but that's going to happen in the next sentence after this. So I know I'm looking for 4122. Actually, 4125 is the first measurable. It's the room for noise as we start to approach 22. I'm looking at RSIs, oversold, at least on the cusp of oversold. That's going to be naturally supportive. So depending on to what degree I want to trade around a position, if I've got a, if I'm trading micros, obviously it's a lot easier to increase and decrease my exposure. I can cover into this oversold and leave runners waiting for the bounce limit test. So I'm lowering the buy signal to 34.50. It's not that I want to take a buy signal at 34.50. I'm really, right now, we haven't even established a low is in. We haven't even pierced the bounce limit by 4 ticks to start the countdown on 4 minutes to know where any higher would represent reinforcements. But I do want to identify anyway. Here's how much room there is for a bounce before it even starts suggesting momentum may be reversing up. You know, a headline hits, peace in Ukraine. Something like that. Of that import, something's going to happen. And so you want to know, maybe you're looking for just the maximum stop, or you want something sitting out there just in case. However you intend to utilize it, I do want to maintain the nearest semi-actionable inflection point, at least for informational purposes. Meanwhile, if we could start probing the bounce limit by at least 4 ticks, which, by the way, will change to 3 ticks in 3 minutes after the first hour. During the first hour, these are all averages anyway. We're talking about putting a stopwatch to a herd of people, individuals. So need a little bit of leeway there. I think 3 to 4 minutes is about as specific as we can hope to get. So 3 to 4 minutes, the usual attention span of counter trend sponsorship. That doesn't mean that everything above, and by the way, I'm calculating where that countdown begins. So that's the only non-arbitrary part of this. So there's minimum 4 ticks probing above 41.30.25. So I know that this could either be strong-handed sponsors, buyers that are absorbing these sellers who are done, or this is just weak-handed sponsorship dominating this. And it doesn't have to be. Of course, strong-handed sellers didn't go for a water break all at the same time. They're patiently letting buyers, weaker buyers, get in here. They're letting the pause. They're taking their foot off the pedal, basically, luring in weaker longs, because those weaker longs are going to go flooding for the exits and help to push price lower to restart the decline. In retrospect, that may be exactly the description that we apply, and it may be entirely valid. But it doesn't really matter what the story is. I mean, if we can anthropomorphize the price action and understand it is really a herd mentality, a mass psychology going on, that does help to interpret and anticipate. But the fact is, mathematically, I'm looking for, now that we've probed this by at least 4 ticks, I'm looking for that 3 or 4 minute countdown to have a degree of confidence where that 3 or 4 minute high is or will be. And again, just behaviorally, the trend is your friend until the end. Until proved otherwise, maybe we're hitting a big target that we've had outstanding forever, but we're not right now. I've still got at least 41.25 before I start letting those thoughts filter in. I'm anticipating that the 3 or 4 minute high to testing the bounce limit is going to resolve down. And maybe some buffer, room for noise. Don't count on it, but allow for it in a stop. You don't want to be in a spot that you're subject to several ticks of noise before you have to reset. But if my objective is a fresh, just looking at the chart, my objective is to retrace the origin of the bounce. 41.27. 3 points profit. If my trading plan says I can take 1 point risk for every 3 points profit, 1 unit of risk for every 3 units of profit, and I can get in short at 41.30 with a target of 41.27, then I can only take a 1 point stop. That doesn't really work here, because I already know there's potential to probe a couple points higher. I don't want to get whipsawed out. So I'm going to be putting a limit order in. If I'm even interested in the trade, I might not be interested in a 3 point profit potential. That's kind of small to mess with. I'm not turning down 3 points. I'm just not assured of 3 points before getting stopped out for 2. So, but let's say I'm going to, let's say I don't actually expect just to retrace the origin of the bounce. I've got a target outstanding for on 2 different accounts at least. I've got the proxy gap, in this case the proxy for the gap from yesterday's 41.60.50 close to today's 41.38.50 open. There's a 38.2 projection that was already influential before it even formed. In other words, the gap is actually a function, the open is actually a function off the overnight extreme. That tells me that the market is honoring this Fibonacci scheme, and having broken 30 is on its way to 25. So that's really my reward. When I consider the risk to reward, I'm looking at the reward being 25. Well, now if we're no longer trading 41.30, but at 41.30, if I'm looking for a 5-point profit, or 41, let's keep it even, 41.31, I'm looking for a 6-point profit, and my risk to reward in my trading plan says I can take a 1 to 3. At 41.31, I can take then a 41.33 stop. Well, that's more like it. I don't want to be short too much above 31.50, 31.75. So here comes another opportunity, it looks like, to sell something around 30. 31 with a 33 stop. The objective being 25. And actually, I also know, forget about the on-the-fly Fibonacci scheme that's projecting out to whatever, in this case to 25. I've had ongoing, I don't know how many weeks we've had a bigger pattern that has since formed, not been invalidated, that says as soon as 41.42 fails to hold the timing window, the next target is 41.22. So I'm really looking for 22. That's not to say that this leg has to get to 25 or to 22. Just knowing those attractions are there and that I have the mechanical benefit. Here's an entirely new track. Just overlaying different things into this trade, into this setup we haven't even taken yet. I can have a trailing stop behind my short. I don't have to get to 25. I don't have to get to 22. I just have to be stopped out at a profit. So I'm not really so much focused on where the trade's going to get to. I'm focused on the attraction that the trade wants to get to, and of course, always is unsatisfying. It's never going to get where we want it to twice in a row, let's say. We are spoiled if it gets where we want it to twice in a row, and that's not good because then we'll expect it a third time. So really, we want to focus on where we can get in good. Meaning, as close to where we know it's wrong to be short, in this case. Not necessarily to reverse to long, just go to the sidelines, regroup, wait for another signal, wait for the pattern to change sometimes. Maybe we're just waiting for something to play out more substantially to the upside. It's certainly possible that we would see the 3-minute high, 3 or 4 minute high here probed above 32 and probed even more. We could probe it all the way up to 38, 37.50 and still resolve down because the way that we got to 37.50 didn't establish a new pattern, just a bigger detour. So right now, all we see on the chart, we don't see trades on the chart. We see risks, risk limits, and potential rewards. The trades are where you execute on that based on your risk tolerance, what ratio between those two you've already determined before coming in today is acceptable. And we may be sitting here for a while waiting for that trade to play out. Maybe you were in at 31 short. You probably didn't get off at a 31. But you can see the significance of 31, at least. It's an interesting feature to the market. It happens to behave better with a 1 to 3 risk to reward ratio. If I know where the risk is, and I know the market tends to honor, for whatever reason, a 1 to 3 risk to reward ratio. I know where the risk is versus the reward. The 1 to 3 ratio between them is usually going to be influential. Why? Well, that also happens to be a 38.2 or a 61.8 retrace of something. The pattern here There's all sorts of stuff going on. 22 doesn't have to be the bottom. It doesn't have to be met to see a bigger bounce develop anyway. These are all just numbers that I know the market is attracted to and is likelier than not to eventually meet. And as long as there's a move underway, as long as there's a support, a key support, and there being broken, the key support being 42, and not just 42 being broken, it was broken all night long here, but only suddenly decided to move toward that target here. We can go back over the last couple of weeks and see multiple probes under 42 that we have known through each of those, if 42 failed to hold, would extend to 22. And none of them did. Because the other important point is price. I'm sorry, is time. The other important point to price is time. This is the first time 41.42. Here, I'm going to leave the overnight in. Here's a 9-minute chart. Here's 41.42. Well, you can go back and see 41.42. That's the first time that we had it as relevant. Yeah, let's go back to the 3-minute chart. So all of these tests of 41.42, none of them broke lower to 22 because they were all isolated. They began after a timing window opened and they were recovered before that timing window closed. They were isolated. Those trapped shorts became fuel to reload back to resistance. None of these resistance recoveries exited their own timing window. They isolated their timing window tests, so they never gained traction to the upside. We've been in a literal trading range. So they never reversed the trend up. They never exploited all that accumulative behavior. For reasons I'm not going to go into here, we do it mostly a bigger picture at the end of the day or Saturdays. I've been describing why this has on net been accumulative behavior but not distributive. That doesn't mean we're finished accumulating at lower and lower levels. It means that when we are, I anticipate that we resolve up in new highs. That's irrelevant right now. So structurally, forget about my calculable price. Structurally, we've just fulfilled the expectation that a bounce resolves in new lows. The trend is your friend. Calculably, I do happen to have some other levels outstanding, 41.25, 41.22. But now with a fresh low, I know two things. I know number one, this bounce limit test held. That's a successful test. The bounce limit was productive. It produced a fresh low, in other words. So if we return to the bounce limit, it's now going to be tested for the first time. Ignore this test. It's already produced a fresh low. That bounce limit's reset. It gets its own new test. Unless the fresh low was of such a degree that I can calculate a lower bounce limit. In any case, this is a new bounce limit. And I can calculate a new bounce limit at 29. I'm sorry, that's not correct. At 29.75. Hardly worth the effort. But now it only takes a 3 tick, not 4. That was during the first hour. Now it only takes 3 ticks probing above 29.75 to start a countdown. There's nothing that says that probe above 29.75 can't be substantial in its first 3 minutes. Just because it wasn't back here doesn't mean it can't be. And still hold its 3-minute counter trend sponsorship attention span. And I do want to add in some other stuff, overlay some other tracks. Pattern. This is interesting. Not compelling. This is more interesting. I've got to alternate between trend lines of a pattern. I can't take 2 hops touching the support and then return to the resistance. That's not a valid trend line if it requires that. This is too much noise. So my renewed bias down at 10:15, it was a renewed bias down at 10:15. The bias down target. We knew that under 41.51 at 10:15 would put into play the bias down target at 37. Well, we were already under 41.51. In fact, we were already under the bias down target at 10:15. That puts into play the next lower bias objective, which I don't label on the screen. And I'm going to use the benefit of new information. These levels are calculated through the prior close. We've already known that new information is basically 22, but 25 is a candidate. So is the 61.8 projection. Oh, the same thing in this case. They weren't actually the same source. Bounce limit is now 29. We didn't touch 29.75, so I'm not going to leave this here. I don't want to leave any mark on here that wasn't actually touched. I'm not going to leave necessarily pattern definitions. My levels I leave because I want to be able to glance at the chart and see what was relevant. See if something relevant was being tested, etc. There's 25, by the way. So another spot to consider if you're just swinging 1 or 2 minis, or Mr. Soros, this is for you. If you're just, trading institutional size contract, then he's not actually in the room, is he? Then you want to consider covering. You can always re-enter short. I'd consider covering this if I were, or sooner rather than later, if I were watching a target area be met, an influential area. I don't know that it's going to hold ultimately, but it's going to be influential perhaps. Things can happen. Headline that happens to be so fortunate as to hit here, a favorable headline, is going to have an outsized reaction. Bounce limit is 27.50. But I would be looking for a place if I saw price go against me. Retrace the most recent lows bar. Here's the most recent bar to make a low. Here's the prior bar to make a low. Here's their 61.8 retracement, 25.25. Psychologically, the market isn't doing that calculation. The herd is not doing that calculation en masse. But this is the point of Fibonacci, is it is a mass psychology. Everybody participated in this. Everybody participated in this. And they know this is the 61.8 retrace. That's a psychological feeling of balance. We happen to know 25 is relevant. Look at all these bars. Probing under 25, but overlapping 25. 25 so far is only being tested. It's not being broken. It is only being tested. Bounce limit is actually 27.25 right now. So this trend may extend. We may consolidate here, dance around 25. But as far as momentum, there's a reason to suspect momentum. And look at RSI. 1 minute RSI avoiding oversold territory. I mean, 3 minute isn't, so it's not that convincing or reliable, but just to point out reasons to be suspicious. All right, so let's leave this here. By the way, this is within 3 to 6 ticks of 22. I really do want to see 22 met, just based on the patterns that I've got outstanding. I really anticipate 22 when it's met will be overlapped the same way 25 when it's met is being overlapped. There's going to be some other stuff that comes into play, some room for noise beyond it. Normally, though, if I were looking for just granularly some sort of near-term objective based on intraday swings, just coming to within 3 to 6 ticks, it doesn't meet the target, but it neutralizes its attraction. It reduces the reliability of it being met. So we haven't yet even begun to touch the bounce limit, so we haven't even started a countdown. On 3 ticks of counter trend, the usual attention span of counter trend sponsorship, weak-handed counter trend sponsorship, the usual attention span of what proves out to have been counter trend sponsorship. All 3 minutes don't have to be spent above, let alone trending further above. Here's an example. As soon as there was 3 ticks probing, we started the countdown, and we knew that the weak-handed counter trend sponsorship's attention span needed to have peaked by then if the usual resumption of the decline was going to remain intact. Same thing back here. Here's an attention span trigger. Barely 2 minutes were spent above. Much more productive 2 minutes than these 3 minutes. All right, I see a question. Let me get to this question. Do I think? Well, that's tough. I'm sorry. Okay, there's more. Do I think if we get to 22, it might be trying to double bottom with the overnight low? Right. Or not looking at that, considering the domino effect and a likely extension lower. I'm not even considering the overnight action after 9:45. After 9:45, overnight decision points, turning points are irrelevant to the intraday. There's a handoff. From the overnight to the intraday during the first 15 minutes. And then from the intraday to the overnight, by the way. Once we start getting out of the position scoring window, there's the position scoring window, 337 to 352. That's when during the day, these are windows when people are basically organized around a central theme. During the open, during the first 15 minutes, everybody's organized around a central theme of getting positioned. During the last position scoring window, people are organized around getting out or making sure they're only exposed to what they want to be exposed to overnight. And then there's that handoff after the position scoring window to the overnight. So during the first 15 minutes and the last, those are really the only times that I'm going to even consider combining prints, intraday prints with overnight prints to form a singular pattern. That's not available to us right now. We're past those first 15 minutes. So this is not a double bottom with anything overnight. This is really the pattern to be focused on. George, yes. Sorry, did I miss something? Not really. I don't think so. George S., I don't recognize your login. If you are new here, any questions you have about the signals that we're looking at or anything I'm describing, this is the place to definitely bring that up, please. If any question about any of that occurs to anybody, it is probably occurring to others, and everybody's just waiting for somebody else to ask. Don't count on it. You know what they say, the only dumb question is the one you don't ask. I mean, that's not actually true. But that's fine. So I'm going to get this written up in the blog. Again, any questions about this? We've got the first. Oh, I'm sorry. I keep wanting to come back to this real quickly. Another setup I call the 10-10-30. It's actually more detailed than that. But what I want to do is look at the first 15 minutes of range. I really want to look at the second 15 minutes of range and compare it to the first 15 minutes of range. So here's the second 15 minutes of range. And here's the first 15 minutes of range. You notice anything about them? The second 15 minutes exceeded the first. Okay. At 10 o'clock, though, when that second 15 minutes of range was lapsing, where were we? So, did we isolate these sellers? Did we trap them? We would know if we'd trapped them because the first 15-minute range's 61.8% retracement would be recovered. That bounce would have retraced more than 61.8% of the way back through that first 15-minute range, and then we would have isolated these guys, and they would be fueling a rally, usually. So what's that first 15-minute range? This is that first 15-minute range. There's its 61.8 retracement. After probing the first 15-minute range during the second 15 minutes, was that 61.8% retracement of the first 15-minute unit, was that recovered when it mattered? No. So, not necessarily a sell signal. I oversold it. Its importance. But it's the basis for one. A bigger one. Just an ongoing observation. And so, if you want to anticipate a pattern forming, that's how patterns begin. By doing something once. If you want to anticipate a pattern is forming, that's something to trade on, is then wanting to see and knowing to be concerned if you don't see that the second half hour does the same thing. We just compared the first 15 minutes to the second the second 15 minutes to the first 15 minutes to establish something significant. Now we're going to compare the second half hour to the first half hour. So the 10:30 to the 10 o'clock. Same thing. Fresh low, and it wasn't retraced 61.8% or more back into the first half hour's range. So this trend is established for the morning. We've established not to trust buyers, or at least if we're going to give buyers any benefit of the doubt, it's going to have to be based on something pretty significant. We're going to need to see a pattern form. We may actually be seeing a pattern form right now. Instead of trending lower lows and lower highs and just noise in between, we may start to see a higher high and a higher low. Even that could be a continuation pattern ultimately, but I see that RSI, 1 minute RSI, diverged positively at the low. 3 minute didn't, so I don't take it as being predictive, or it doesn't rise to that level. In retrospect, we may be able to look back and see a number of 1 minute RSI diverging positively, while 3 minute RSIs get oversold, and that goes on to something more substantial. That may happen, but not to the extent or reliability that it becomes a signal. So instead what I'm looking at, here's a minimum 3 ticks probing my bounce limit. My bounce limit was probed. My bounce limit was 27.25. It was probed by a point. Now one of those ticks was errant ticks, but still I got 3 ticks in there to start the countdown. There's the 3 minute high being probed. Is it holding its retest, or is it being probed? It's being probed. So that down leg is violated. The downside momentum, its bounce limit, is violated. I need a new sell signal to tell me that momentum is reversing back down. At least for this morning. I can tell you, as this bounces higher and higher, I'm not really focused on a long right now because we just can't get them all while I'm describing. But if I wanted to, I could have a buy signal within 1 or 2 point buffer of this bounce limit, 41.28.25 that was tested. And I can tell you, if we weren't busy gossiping, the buy signal would have been at 29.25 to 30, anywhere in there. So just to track it, let's say 30 is being tested, 30's buy signal, 30 or 29. It makes a difference because we're doing a countdown. Did the countdown start already, or are we only 2 minutes into it? Because when we get to that 3 minute high, if I have a degree of confidence that we're still going to resolve down, which, by the way, look at this bias down we're in. I have a degree of confidence that we're still going to resolve down. I'm not really interested in the longs. I may miss out on the long of all time, but today, but on an ongoing basis, I'm going to be focused usually where the market is. So let's say that's the case today too, that the market's not interested in recovering. It's not interested right now in recovering. It's in a bias down. The bias down window doesn't even start lapsing until 11:30. It just got finished triggering bias down. So yeah, it's bouncing off of what we knew was going to be relevant support, 41.22.25. Of course it's going to have a bigger bounce. We could trade that if we wanted to, and oftentimes I will when I'm not in a super explanatory mode. But what I'll be trading it for is this bounce that will still be likely to fail. So, and it didn't have to be this big a bounce. It could fail from here. It could fail from here. I still expect it to fail, as in resolve and fresh lows, or at least attack the lows, because it's originating in a bias down. So, bounce limit test. So there's, in any case, there's my high of the test. 32 is the high of testing what would be a buy signal as aggressively as I could posture the buy signal, giving a 1 or 2 point buffer, room for noise above the bounce limits test. So this is going to be the peak of what might still be counter trend, weak-handed counter trend sponsorship. A little bit stronger, maybe even weaker handed sponsorship. It just so happens a lot of sellers were dissatisfied, so buyers don't have to be any stronger to have this kind of effect. But this is a very likely peak right now, up here at 32. So now I'm looking for how much of a reaction down is going to be too far removed from 32 and tell me that this bounce is potentially, presumably even, failed. So I'm searching for the Fibonacci relationship that explains this bounce, these legs in unison. So 28, 27.75, 28 is a pretty important line in the sand here. I don't know that I want to just suddenly sell 28. I can tell you 29, 25 is an important level as it happens. So it'd be kind of nice to get a little bounce back in this range, say to 30, I don't know, 30.50. Something between the two fibs. And not from too much lower because the calculation goes away, but if I can get 30.50, so there's my bounce. I don't need 1 or 2 points buffer for noise. I really just want a few ticks. Maybe a point, 31.50 stop. And my expectation on this is to be attracted back to the low, and I may very well be stopped out before ticking down at all. May very well extend down to attack the low, but never reach the low and be stopped out on a trailing stop. I just know that there's potential to resolve down, and that we're very close to where that is a wrong assumption to make. Those are the only two things I know at the core before I even start doing the math that tells me where to put the trade. So 3150 is the psychological number to a degree, especially as we get more granular in the inputs. It's going to be more reliant on my calculations versus a herd mentality being so sensitive to these little swings. So it's not. So it's going to be more vulnerable to whipsaw. And if I'm stopped out at 3150, then I'll probably immediately replace that with another sell stop in case that's just noise, and whipsaws right back down to continue playing out the original pattern. We may very well just range sideways. The bias down, yeah, we triggered bias down. We renewed bias down. We produced a lot of selling pressure in establishing the bias down. The bias down may be no more productive than we've already seen. Except that for the window, the bias refers to the timing window, not the range of prices. It's a x-axis influencer. It's telling us during this window, supports are likely to break, but also resistance is likely to hold. We could spend the morning of the bias down environment just holding resistance and fulfill the bias down. The bias down will have been influential if all we do for the rest of the morning is sit here holding resistance. Sellers became entrenched. They're preventing buyers from being productive. So because I know the bias, I'm not going to look for a buy signal. I mean, I could, again, above 3150, really above this prior high. But I don't know if that's going to be for a couple ticks, a couple points, or a couple dozen points if some sort of news catalyst, for instance, were to come out and give it a good leverage. The likelihood, not a real word, the likelihood is that this resolves down or chips away at support, or at least if I knew going into every single window that from a process of elimination what was unlikely to happen, that's 90% of the battle. Because much more often than not, when the thing that is unlikely to happen doesn't happen, something else happens in its place. That's actually 2/3 of the battle. Okay, so this is clearly not working out. I'm still going to want to get, I don't know if this is just noise. I don't see RSIs doing anything impressive, so I'm not, and that we're still well in the timing window. It's not like we're on the cusp of the timing window lapsing and maybe it's getting ahead of itself. I'm still looking at short entries. And if I'm, one tactic is to sell strength, another is to wait for the inflection. I'm definitely wanting to be short under 28. That doesn't change. And here, look at that. A lot of noise. Unfortunate, but that happens. That's much less important than what to do next. We put a lot of time and effort into identifying this very little point of resistance and the very great opportunity for it to resolve down. And these few errant ticks, this one bit of noise, isn't going to ruin our work. We're just going to have to come back, and it's going to be a little more expensive with another trade. And if that gets stopped out again, then that's enough for that, no matter how much work we put into it. But if the stop turns out in seconds to suggest that it was just noise, I'm going to give that pattern even a bigger benefit of the doubt. Because now the rubber band just stretched and is snapping back down. Now we just trapped all these longs, weak longs. They're dumping. So, but again, I'm not going to stay exposed back above 3150 again. Maybe I'll adjust that based on this new information, but I'm trading this original pattern, and if it takes out its stop, its bounce limit again, so to speak, then maybe something else going on. I'd be a lot more concerned about being short if 3050 were ever probed by a detached bar. All these bars are overlapping 3050, just like all these bars down here were overlapping 25. Sellers weren't really gaining traction down here. Buyers weren't really gaining traction up here. So, still keeping alive. Downside potential. Here's another pattern that may be forming. Looking like an inverted head and shoulders. Something interesting about head and shoulders is very often they are continuation patterns. If this were the more traditional, if this were to behave like the more traditional inverted head and shoulders, then I would expect from the left shoulder to the right neckline, the 61.8, the 161.8, maybe even the 261.8 to be met. Same anchors for the Fibonacci tool. Left shoulder, right neckline. And the continuation pattern, I'm expecting either the 100 or the 200. 4122 or 4118. And this sure looks like it's forming an inverted head and shoulders. If it's not, if it's a reversal, look at what I just learned. I just learned here's the left shoulder. It gets up to about 32. I don't want to be short above 32. I already knew that. The plane, the rising plane here. It's been influential. That's where I might start looking for a buy signal. I was saying earlier, things may change. A pattern may form. If a pattern forms, I'll look for a place. It may be a reversal pattern. Well, if this is a head and shoulders reversal, and this is the neckline, then I certainly want to consider a long somewhere up here, say 33. Actually going to be a little, pretty tight, 33.75. I would consider a long triggered above 33.75. All right. I'm sorry I missed this. I see a request for Google. Let me know if you're back for Google. So potential for this to be an inverted head and shoulders. Notice we're now within view of the bias window lapsing. The bias window starts lapsing at 11:30. This may gain traction. That may have been coming to within 6 ticks of 41.22. For now, may have been sufficient. I was not impressed with RSIs at the low. Not to the extent that I would put money behind low in there, but certainly noted why the downside would need refueling. This may be that refueling. This may be the end of the pullback, just a brief low. I'm just going to keep getting aggressive on a sell signal. I'm at 31.50 now. Can't be doing both. Got to choose. Can't be correcting a buy signal and triggering a sell signal with the same bars. I do not think this path is going to play out. Or at least it's just a little too extended to rely on that path playing out. So we got all sloppy up here on the bigger correction. The minimum 61.8 of an inverted head and shoulders was met. But never gained reinforcements, just held its, or its reinforcements themselves were limited to 3 minutes. But in any case, big reaction down. I don't see that this is a knee-jerk reaction to anything. I mean, there's a lot of bad news, obviously, but so I'll still look for this parallel trend line. I'm still looking for at least 2650 in here. This bounce during the bias down, all this bouncing represents weak-handed buyers. They are trapping themselves. They're now being used to fuel the decline's resumption. So if 4126 doesn't hold this parallel support, then 4122, actual test of 4122 is next. And the bounce limit is 29. So this hesitation here at the low, everybody knows where the low is, and the hesitation there is just obligatory. It is for no purpose. It reflects optimism, ineffectual optimism, because it really has to fail. And so that, by extension, from a contrarian perspective, is bearish. So I'd still like to see 22 probed. This detour didn't have to be to this degree. It didn't have to be to this degree. It was to a pretty big degree. In retrospect, probably a function of having tested some pretty significant supports, but that doesn't necessitate the degree to which it's going to detour. But it is a detour anyway. And the bigger the detour, it gives us information. The bigger the detour during a bias window, the more counter trend fuel there is for the fire. We know that the bias was down. The bias down environment was very much intact. I'll be right back. So still haven't actually touched 22. I'll be surprised if we don't actually probe 22, but there's an attack, a sentiment extreme, attacking 22. The bounce limit is 25. So we're only here starting to test the bounce limit. We're, remember, expecting bounce limit tests to fail during a bias down window. But are we in a bias down window? We're actually on the cusp between the bias down window lapsing at 11:30 until noon. It finishes lapsing at noon. So we're in the process of the bias down window lapsing. I suspect, I mean, we've got all these suspicions that this bigger detour is going to increase the degree to which the low is probed. This is nothing. That this part of the bias window having been spent bouncing, instead of being influenced, expressing a bias down behavior, that's going to be punished or have a consequence to it. Structurally, it doesn't have to. Structurally, look, we've got a retest of the low. So there's no retest of the low outstanding. Technically, it doesn't have to. You know, this is kind of small or minor, this fresh low, but nevertheless, 1 minute RSI does diverge positively on it. And 3 minute RSI already diverges positively on the entire test. So, I don't, structurally and technically, we don't need a fresh low here. 22, as much as I would expect to see it actually probed, doesn't mean it will be. The general area is definitely met. The big detour that probably loaded up on sellers, on potential sellers, weak longs, to become impatient sellers on the way down. I don't know, to some degree they're already expended, but they are. Hang on, is the sound working right now? Let me just double check that, because I do turn it off from time to time when I'm not speaking. But is sound working at this moment? All right, so structurally, technically, this qualifies as a bottom. Calculably, not just my rules, but my calculations, were within 2 ticks. Not a strong 2 ticks. It's just, actually, we barely managed that from 3 ticks higher. So still not, the bias window is within view of lapsing and on its way to lapsing. That doesn't mean bias down stops being influential, but it is not an overriding factor. So bottom line is I can start entertaining longs more seriously, not just as temporary corrective bounces, and I will. That's not to say a bottom is in, but it can be. Now, this pattern doesn't really lend itself well at the moment to a bottom. But I'll get more aggressive. I can get more aggressive now. I can buy dips. I don't want to buy dips right now. I was selling strength on the way down because it was a bias down window. We're not in a bias up window, so I'm not buying strength. But here we are with a bounce limit being violated now. Here's 3 minutes on testing a bounce limit up to 26.75. 1 or 2 points, room for noise above it. I mean, I could lower the buy signal. 28 would be valid as well. Probably 28 goes on to pierce 29, so why not get whipsawed out of 28 instead of waiting to get whipsawed at a higher cost basis? So, having said that, this is a sell signal, or not a sell signal, but a short entry. It's so close to right now, it's wrong to be short. In fact, I'm going to reverse to long above 41.28, really above 41.29. So 3 points of risk being short at 41.26 for the potential to resume the decline. Probably to probe under 22. Probably by at least a 2-to-1 versus 3 points of risk. Question, sounds like the premise has shifted to the downside since we now under 42 for longer than a single time. No, that actually doesn't have any bearing on it. 41.22 is the next relevant level. Actually, 41.22 and 41.08. It's not a matter of a number of timing windows. I mean, look at the last week. We spent a lot of timing windows above 41.22. That didn't launch a rally. So the inverse isn't going to be true either. The question is whether holding it puts into play something else. The something else that was put into play under 42 is being met right now. We haven't broken it. All right, so we're coming into the noon hour. A new extreme right at noon. That's just not. I mean, it's right at a great spot, but that doesn't make it any likelier to hold. RSIs are diverging positively. That doesn't make it any likelier to bounce. It actually does, but it's not. So it may actually be a low. It just doesn't have the preponderance of evidence and behaviors behind it. The timing doesn't make great sense to look for a low right now. We can see a low develop here sometimes, but not one that I would position for. So the bounce limit test was 41.25. That produced a fresh low. So 41.25, it wasn't a fresh enough low or low enough lower low to calculate a new bounce limit. So 41.25 is still the bounce limit. It's actually the new bounce limit. And we'll have new bias parameters based on price action through now into noon. But just looking ahead, we've already known that the next lower attraction under 41.22 is really a different pattern that's also developing simultaneously, and that gets us down to 41.08, 41.11. So we're looking for 41.08, 41.11. Probably, I mean, unless somehow 41.22 is the low, which isn't likely, and we'd have to see some different price action. Not more of this, or there's nothing about this that is bullish. Potentially bullish, that is RSIs diverging positively, 41.22 being tested, but the burden of proof is just too high to be able to step in front of it. All right, fresh low, bounce limit is 23.75. It is the end of the morning. This is a 2-day free look, 2-morning free look actually. The video room goes on. It is from Sunday night through Friday's close. All day long. We get signals all day long. The morning, unless I'm doing a simulcast like this, I'm not generally generally going on to such great extent, other than for the first several days of onboarding new subscribers. So, and that's kind of what this is for, to give you a free and really frictionless opportunity to see how it works. There's no delay, no latency in the room itself for the broadcasting, but we also have some onboarding videos and a whole program that you go through. I'm going to go ahead and basically drop this here. There's a special savings offer. You're welcome to come back tomorrow morning for free. I don't know what we're going to be trading this afternoon, and it is one morning. But here's the... Yeah, so normally if you go to the site right now and you sign up, your first week is free. You're not even charged during the first week. And if you cancel before the first week, you're not charged at all. But if it renews, then it renews for $175 for the first 4-week term, and then $375 after that. That's because the video room itself is $200 every term. The blog, if you just want the email alerts, the discussion, the narrative discussion, that's $175. And so for the first term, the video room is no charge. So that's 5 weeks. If you go to the site, it's 1 week free of the entire service, and then 4 weeks free of the video room for $175, and then it's $375 every 4 weeks. And if you use this link instead, there's no free week to the whole service. There's no free trial. This was kind of your trial. And you can come back tomorrow and do the trial again. And I'll have the same offer there tomorrow. This offer will be available through tomorrow. But you can also, instead of getting a free trial, what you get is the free video room for 3 terms. So rather than a free week and then save $200 the first term, you save $600. I think that was the term that we landed on. So if you want to use that, and again, I'm closing the room shortly. I'm going to leave it open actually for a little bit. But if you want to come back tomorrow, you're welcome to come back tomorrow morning. I don't have a regular schedule for these. I don't... I'm actually considering something that is even less regular than this every 2 or 3 weeks. All right, so again, this YouTube stream will remain open during the noon hour, maybe all the way through, I don't know. All right, so the noon hour is almost over. Really going on a little bit longer, but you can see how the bounce limit works. The placement of the bounce limit, identifying a 3-minute extreme. The 3-minute extreme being an opportunity for entering in the direction of the trend, the likelihood for the trend resolving or resuming, extending, and the different discussion, description, and management that I offer in the narrative ongoing. There's a lot of other stuff here. So join us tomorrow morning. Coming back tomorrow morning, same schedule. The next opportunity after tomorrow morning to hit this YouTube stream is going to be a couple weeks out. Probably something before Memorial Day. But, of course, if you want a special savings, go to that link. And, again, that'll be available tomorrow, too. All right? Thanks, everyone, for being here. See you tomorrow. Take care.